Hello, brilliant community and wonderful people. Today we're going to talk about a less commonly understood concept hidden within support and resistance. In the ever evolving landscape of price discovery and your own character and personality, it's our responsibility as traders to recognize the interplay between supply and demand, or fear and conviction, or strength and exhaustion, which is one of the things I feel myself recently, and so have to temper my behaviors with that in mind. Today, I want to direct our focus to a nuanced aspect of the market structure, those tests of support and their role in defining the risk-reward landscape. So if you understand support and resistance as a classical chartist, you'll know that support and resistance are not static lines that are drawn arbitrarily across a chart. They represent a collective psychology of all market participants and areas where either buyers or sellers have historically been willing to assert their control. Resistance, at its core, is the battlefield where supply has previously overwhelmed demand, which led to price rejection and then a subsequent reversal. Conversely, support is where demand has historically been strong enough to halt a downtrend and absorb that selling pressure. However, it's the dynamic nature of these zones, in particular support, that can offer the trader a critical insight into this idea of trend continuation or reversal. And as a trader, it's your job to look for continuation. There is an illusion of weakness when price descends to test support. That can often trigger a psychological response, the instinct to short into perceived weakness. So if you think like there's an opportunity here to make a little bit of a move, I'm so convinced that this thing's going to drop a little bit further, that illusion, especially if it's and playing on your own anxieties, can trick you into missing these nuanced little signs that actually there's a degree of underlying accumulation and there isn't going to be an imminent breakdown. So you can get caught on the wrong side of a trade when you genuinely want to go long. That's been your long-term objective. And sometimes as a trader, you can get tricked into going the wrong way at exactly the wrong time. This is where volume, price reaction, and the concept of relative strength has to be analysed, and you have to do it with precision, not just to satisfy a bias. And increasing volume on support tests would suggest that that test of support is leading to absorption of that selling pressure. This is the sort of process where larger market participants systematically accumulate their shares. A lack of downside follow-through after those periods and the emergence of a higher low within a consolidation phase reinforces this thesis that the trend may be preparing for an upside move, that continuation failing and a reversal imminent. Contrarian thinkers often have an advantage here because they recognize accumulation. To trade effectively, you have to think beyond the obvious. Shorting into multiple tests of support, for example, particularly when volume is surging and price stability is emerging, will be a very costly mistake. The market doesn't always punish those who follow the obvious trade, but it certainly rewards those traders who can spot where the consensus thinking is flawed. And I would remind you of a discussion about beauty pageants that we had before at this point. Signs that support might be strengthening rather than weakening would include things such as decreased volatility, and you might see that on every test, and subsequent strengthening of that one signal might indicate diminishing selling pressure. Higher reactionary highs fall in each test would set off on smaller time frames this idea of higher highs and higher lows, and that would be a sign of demand overtaking supply. Also, we can see an increase in volume on these bounces that show buyers are stepping in with conviction at that point. A failure of price to break down, despite repeated attempts at hitting support, will ultimately signal exhaustion among sellers. If all these signals are in place. Otherwise, support will be getting increasingly weaker and brittle with each test. So it's important to recognize the difference and use that list of options to look through with regards to analyzing the strength of price. And use all of them because precision is important. This point, when you have all of your boxes ticked and you see that error in consensus, that's when the long trade presents itself. Not in chasing a breakout. It's about getting the chocolate on your biscuit. Recognize the opportunity at the low ebb of the move. This is where the risk is defined. This is where you can have the tightest stops. This is where the contrarian entries will end up providing the best risk-reward setups. The difficulty can be positioning yourself for the move. The goal isn't obviously to blindly buy every test of support. You have to read the structure and understand the intent of market participants and the consensus. Proper execution always requires patience. Allowing the market to tip its hand and give you a heads up on what's coming next requires you to be calm and wait for those signals, including confirmation. Once the evidence is substantial and you can say for sure that accumulation rather than distribution is going on, you can position yourself for the next move. Anticipating the move before the confirmation gives you a better opportunity to react as the confirmation comes in, rather than waiting till after the fact, trying to jump in on a move that might ultimately be part of a retest and you get caught in a wash. In conclusion then, the next time you're looking at a stock such as Lisbon, you'll be wondering, where is support? Ask yourself this: is this distribution or is this accumulation? Does this look like weakness, or is this, as Tradespotting says, the starting point of opportunity? Because the market will reward you if you can see beyond the surface and manage to position yourself accordingly. So stay sharp, trade with discipline, and remember, the best traders are often take advantage of those moves that the majority of the market fail to recognize. And the majority of the market fail to recognize things because, like I say, price heavily influenced by psychology. A third test of support here would be a third, so 1, 2, 3, really important. I mean, you've had obvious levels where that line has been tested previously, but that would be a third strong bounce level likely. So you had a really strong bounce from this area, another one from this guy, and a third that might be possible. This is 158 bars from the previous low, which itself was 300 from that before it. So a tightening cycle, that's obviously part of what I'm talking about here, along with the volatility and the volume surges. Now, I take volume's wife out to the cinema when everybody else is putting far much too attention on volume itself. And you have to watch out for traders like me, because we know the difference between volume that's confirming a reversal, one that is absorbing selling pressure, and changing that supply-demand distortion, as opposed to traders who are just confirming a bias with lots of volume coming in. Because remember, for every buy there's a sell and vice versa. So this third touch potentially, I mean actually it's significantly more. You had 1, 2, 3, debatably 4, and could be a fifth. The question has to be, what's the volatility like at this area? Is it decreasing? What's the volume like? Is it actually accumulation? And do we see a higher low? And does that give us this idea of being relatively stronger support than it was on the last touch? Now, the reason that all of this is so important to traders who are looking at LPSN isn't whether or not this is going to hold, because you will never ever know until after the fact, because you can't tell the future and can't see beyond the quantum wave collapse. All you can really say is that if you're looking for a higher high subsequent to a test of strong support, you might look at the nature of those lines of support and resistance, the parallel nature suggesting a channel, that's suggesting a linear trend. And so the differences become easier to spot when you have such a clear structure. And I've outlined it here for you. If you've missed that, go back to the start of the charting section and listen carefully to what I've been saying. The point being that if this does prove to be support, and everything I said about that support proves to be accumulation, then the next time it touches resistance, we've hit it on the breakdown once, on the next high, and on the third high. If you go there again, It doesn't necessarily break on the first pass, but if the retracement halts anywhere along these prior highs and then moves up, having previously put in a strong level of accumulation, a test on the macro trend line here, also showing relative strength, and the retracement from the topside resistance doesn't take you back below the prior formation, that's this triangle, and then subsequently goes to resistance, you will see LPSN break that resistance and head to the next level. That won't just be closing the gap, that'll be far beyond at the price found resistance on its last move to the top side. So it could be in at around 380, it could be higher towards around $5. And if all of that breaks, there's a bottom side of important gap in at around 640. And if the volatility has been dropping at this level and price leads to an expansion, an increase in volatility, and a change in the trend, that's when you see the strongest impulse moves to the top side. So this is a really, really detailed video with an awful lot of expert trading advice delivered in a simple way that can be rewatched so that you'll understand the concept, the story, and the structure of this video, and it'll help you best take advantage of the move coming on LPSN. Now, just to be clear, the best entries, the best amount of chocolate on your biscuit comes at support, and that is in at around $1 to $1.10. Above that, the resistance in at around $2, $2.20. The retracement subsequently not lower than 169, and the break at 220 subsequently could lead to a 2, 3, 400% move in price. So these are the potential outcomes, the hidden lesson in support and resistance, how it is that demand overwhelms supply, and how you position yourself to take advantage of that move accordingly. I've been Tradespotting. You've been the best trading community in the world. Thank you very much for watching this video. Please help each other on Discord, support each other in there with the lessons you're learning and your ability to make the most of these charts. And I want to thank everybody who supports this show with the proper amount of watch time, hitting the like and share button, and leaving comments below. And in particular, those very few people who do decide to support the show. I really appreciate you guys. So thank you very much for watching. This has been a top quality episode, and I hope it'll help you. I'll see you tomorrow. Tradespotting out.